Hi, everybody. Welcome to Chapter 7. So I have 3 problems that I want to do for Chapter 7, Part 1. And the first one is problem number 10. This is not one that was assigned. 2 of them that I'm going to do are not ones that are assigned. And then problem number 14 is one that is assigned, and I'm going to do a problem that's the same problem with different numbers. Okay, so let's look at problem number 10. So here we have Clarita is a single taxpayer with 2 dependent children. So we want to pay attention to, is the taxpayer single or are they married? What's their filing status? And then also how many dependent children. That makes a difference in our calculation. They tell us their ages, ages 10 and 12. They are young enough that both of the children qualify. Clarita pays $3,000 in qualified child care expenses during the year. So what we want to do there is, so we have her $3,000 in qualified child care expenses. That is less than the maximum. The maximum is $3,000 per child. So if she had more than $3,000, she could have had up to $6,000 in qualified child care expenses for the 2 children. But she only has the $3,000, so we want to use that $3,000, and then we also want to look at her income to figure out what percentage gets applied. So then they tell us down here, her adjusted gross income is $18,500. So $18,500 falls right in this range right here, and we're going to use 33%. So for this problem, the answer would be her $3,000 of expenses times 33%, which is $990. Okay, I want to look at number 13. Here's another one with child and dependent care expenses. It's kind of fun. Some of this stuff, you're working on child and dependent care expenses, for example, and there's so many other items that are like this in tax where we could do 5 or 6 or 7 problems on the same topic, just with a little bit of varying circumstances. So I guess that's either kind of annoying or it's kind of fun, depending on what you think about it. Okay, number 13. Okay, so we have Martha has a 3-year-old child. So one child pays $10,000 a year in daycare costs, and her salary is $45,000. So we want to pay attention to the fact that there are limits for the amount of qualified child care expenses that we can even use in our calculations. And the limit per child, and if you go to your book on page 7-17, in that section 7-3B, the allowable credit, in that first paragraph towards the bottom, they remind us that the maximum is $3,000 for one dependent and $6,000 for 2 or more dependents. So we're not going to get to use that entire $10,000 of daycare expenses since there's only one child. We can only use $3,000. So first of all, we can only use $3,000, and then we want to know what percentage we can apply to that $3,000. Her salary is $45,000. $45,000 is all the way down here at the bottom. So it's 20%. So $3,000 times 20% gives us $600. So that's kind of interesting to know. So there's no limit on the adjusted gross income amount for these child and dependent care credits. So anybody that has a child that is young enough and has child care expenses, they're going to be able to have a credit of a maximum of $600. So say if you make $100,000 a year, you have one child and you pay $5,000, $20,000, whatever the amount is, anything above $3,000 only is $3,000. That person is going to be able to get a credit of $600. So it's not phased out for any income level. Okay, let's take a look at number 14. So 14 is one that is assigned to you, but then I'm going to do a similar problem that just has different numbers. And here we are again with child and dependent care expenses. So this one, the situation is just a little bit different. So here we have a married couple, Marty and Jean. They have 4-year-old twins, so we've got 2 children. Jean is going to school full-time for 9 months of the year, and Marty earns $45,000. The twins are in daycare so that Jean can go to school while Marty is at work. The cost of the daycare is $10,000. So the first thing that we want to pay attention to here is, again, go to page 7-17 in your book. Under 7-3B, the allowable credit, go down to that second paragraph. And this is important for this particular problem. Where is it on there? You know, it starts out, married taxpayers must file a joint return to claim the child and dependent care credit. And then the qualified dependent care expenses are limited to the lesser of either spouse's earned income. So one of these spouses doesn't have any earned income, but there's one more thing that we have to look at. So if you go down a little bit further, a couple lines below that, you see a special rule applies when a taxpayer or spouse is a full-time student or disabled. Full-time students or disabled taxpayers with little or no income are deemed to have earned income of $250 per month for one dependent, or $500 a month for 2 or more dependents, for purposes of calculating this limitation. So here we have 2 dependents because there's 2 children, they're twins, and Jean is going to school for 9 months. So Jean gets to have, for purposes of this calculation, she's going to have earned income of 9 months times that $500 a month. So $500 a month times 9 is $4,500. So Jean, for these purposes, is considered to have income of $4,500. Marty is considered to have $45,000. We can only use the lesser of the two, so the $4,500. And then what we want to do with that $4,500 is multiply it by their percentage. So $4,500 is the maximum amount of costs that get to be considered. So they don't get to have the full $6,000 like they normally would have for 2 children. They definitely don't get to use the full $10,000 because that's above the $6,000 threshold anyway. So if we take that $4,500 times 20%, because their adjusted gross income is down here at the bottom, it's more than $43,000 for them as a couple. We have to use 20%. So here we're going to use that $4,500 times 20%, which is $900.